That's what they told us. Okay, so what are we going to be doing here? We're going to be looking at, again, all sorts of different income categories. We're going to learn about annuities and figure out how much of that's taxable. We're going to look at very specific exclusions from taxable income, things like scholarships or inheritances or life insurance proceeds specifically aren't taxable. We're going to look at some fringe benefits that are taxable or not taxable, muni bond interest, and Social Security payments. Okay, so, and I've said this before, tax code defines gross income as income derived from all sources unless it's specifically excluded. So that's really the key here. When a client comes to me and says, such and such includable, I got, paid to be a clown in the Dayton Days parade, is that taxable? Yep, unless we can find something that specifically excludes participation in a parade and being paid for it, yeah, it's taxable. I gave you the example where I went to Reno last year and did that workshop. Is that taxable income? Sure it is, because it's not specifically excluded. Okay? You should become familiar with tables 2.1 and 2.2. Those are comprehensive lists of what's taxable and what's not taxable. And really, I'm going to spend time this unit talking about what's not taxable. Those are the things that you'll kind of, that will kind of stick out for you because everything else is taxable, right? What about if I went to the conference and they gave me a $2,200 gift card to go shopping in Reno or to go gambling in Reno? They didn't give me cash. Is that taxable? Sure. Non-cash items are taxable at fair market value. What about my client, and I've got a lot of clients like this, you come paint my rental and I do your taxes. You come cut my kid's hair and I run your payroll for your small business. Is that taxable? All barter is includable at fair market value. Is it traceable? Not really. By law, is it taxable? Absolutely. Okay. Now we've got virtual currency, right? PayPal, Bitcoins, things like that. And the IRS is always trying to, I think, catch up with these new technological shifts and how income is passed. And so now that is all taxable. You have to issue W-2s even if it's digital currency or virtual currency.
I was wondering, in the newspaper, I think it was a newspaper, it was talking about how this lady had, was selling her things on eBay or something like that. But it said something about that unless she made up to $40,000, that it wasn't taxable. And I was like, how is
I'd
that
like to
possible?
look at that. No, anything if you're earning over $400.
Yeah.
Now anything that goes through that has a PayPal account, and I'm not sure I'm going to get this right, but I believe you are now issued a 1099-K. We have Airbnb in our basement since our kids left home. We didn't know what to do with the 2 bedrooms and the bathroom down there, so we have Airbnb. At the end of the year, Airbnb cuts us a 1099, actually a 1099 miscellaneous. So the IRS is, Uber. I mean, you think about all these, potentially lucrative sources of tax revenue for the IRS. They've got to figure out how to track that. And I can tell you, people don't report it unless it's tracked. So I think what you're talking about is I think they would be issued a 1099-K. I would actually have to go look that up.
Well,
And I've never heard that $40,000 number.
I know, that's what was weird, or 27,000, I can't remember, but it was weird because it was, something about, because it was her own belongings that she was just putting up there, like, sort of like a garage sale.
Okay, now sale of personal items.
Yeah, that's what it was.
Because what you're trying to do then is compare the cost with the sales price. So like say I bought like Beanie Babies. My kids were really into Beanie Babies when they were little. Or are they still in?
What's that?
Beanie Babies?
Well, my kids are 23.
Okay, mine too. My kids are 24 and 27, yeah.
Okay. I know you probably assumed my kids were like 5 or 6, but no.
He's a lot younger than I do, that's for sure. Anyways, so I'm not going to take any more time until I look into it.
Yeah.
I want to address that specifically.
Okay.
Okay, so now we're kind of just going down the manual recap or the tax return because it's the same thing, right? And we know wages, that's pretty straightforward. That's our first line. Second line is interest income. And we know that a Schedule B reports our interest and dividends. We also know that even if you got like a little, and what do you get from the government if you have interest? What's that called? Right? And with interest rates being what they are now, at the end of the year on my savings account, I might get a 1099 INT that says I made $17 or something. Okay? Do I need to go fill out a Schedule B? No, because I didn't get to 1,500. Do I still have to put the $17 on line 8 of my tax return? Yeah. Okay. Interest is reported in the year it's received for cash basis taxpayers. That describes almost all of us. Say that and I don't even know that these are around anymore because savings accounts are so incredibly unattractive, but I deposit $10,000 in a long-term money market and my bank gives me a $100 NutriBullet to make my morning smoothies. Okay, that's taxable. That gift, fair market value of gifts and services a taxpayer receives for making long-term deposits or opening an account are taxable interest. So that actually, the end of the year, my 1099 INT is going to show my $17 plus the value of the NutriBullet for $99. Okay.
The bank will send you that?
The bank will send me that. This is what I get from the bank.
Yeah.
Okay, government bonds. So government bonds, there's basically 3 types, although these have been sort of phased out. Double E bonds are sort of the standard federal government bond. And what happens with those is you buy a $1,000 bond at a discount. And you can mathematically calculate what that discount is. So I buy that bond for $926 and I hold it for 20 years, and at the end of 20 years I get $1,000. So the $74 is obviously the interest over that 20 years, right? I can tax it, I can pay tax on it in the year of maturity, i.e. when it becomes worth $1,000. Or if I cash them in, I'm sick of holding on to them. I cash them in early, then I'm going to pay tax on the interest in that year. Double H, I'm not going to really talk about. There's not many of those out there anymore. Double I, or I bonds, have been pretty popular for the last 8 or 10 years. These are, they don't hold a static interest rate. The interest rate adjusts for inflation. And you pay tax on the interest each year. Now, let's take a look. Do you guys have a manual recap handy? Of course I don't. Oh, no, here it is. We haven't looked at all at Montana, at the Montana adjustments.
No.
At all. We haven't actually even looked at a Montana tax return. But I do want to point something out. That to do Montana's taxable income, we start with federal AGI and we adjust. Right? What's the first item under reductions for Montana? Exempt interest from federal bonds and notes. Interest income from U.S. government bonds is not taxable for Montana. So you would put, say that you had a client that came in and said, I had $2,200 of double E bond interest this year. That's going to show up on the federal tax return, and you're going to pay tax on it on the 1040. But if you input it correctly in your software, you would check and review it, make sure that that $2,200 was subtracted from your state tax return. You do not pay income tax on that. Conversely, for municipal bonds, In other words, state government, city government, county government, any taxing authority in the state, that's taxable. In Montana, if it's from another state, but it's never taxable for the feds. So maybe the best way, I think I should probably try to do this. Let's do a little chart. So we've got, let's see how am I going to do this. Corporate bonds. You know, Microsoft needs to borrow $100 million, so they issue corporate bonds. Then we've got federally backed bonds. We just looked at double E's and I's, but that's also like Fannie Mae and Freddie Mac and any of those federal government-backed bonds. Then we've got non-Montana muni bonds. For example, municipal, yeah, sorry. Yeah, non-Montana municipal bonds. An example for that would be, you know, I'm buying a bond for, you know, Nashville wastewater treatment plant, you know. Or a Montana muni bond. So we just here in Missoula passed a $45 million bond for the Fort Missoula Regional Park and some different open space. That's a Montana muni bond. So these are really basically the 4 big categories of types of bonds that you or I could invest in. Okay. Corporate bonds, are they taxable at the federal level? Sure. Are they taxable at the state level? Sure. Federal bonds. I get a couple grand from Fannie Mae. Taxable at the federal level?
No. Yeah.
Go back and look at Montana. This is kind of your cheat sheet here. It wouldn't be in the reductions column unless what? Unless it had been included on the feds, right? Federal bonds, taxable for feds? It is. Taxable for Montana? No. So what do you have to look for on your Montana tax returns? Yeah, that it's a reduction, it's subtracted. Non-Montana muni bond. I bought a Nashville wastewater plant bond, and I got a check for $600. Do I need, and I'll help you out here. Go and look on your Montana tax, or your Montana manual recap again. And this hopefully will help you see what happens.
Well, looking last night, the federal exempts state.
Yeah, the feds exempt state bond interest. Let me say that again. The feds exempt all states and Puerto Rico the interest from their bonds. You don't pay income tax, federal income tax, on interest from bonds from a state. The feds do that to help states set lower interest rates that are still really equal to higher corporate bonds because I don't have to pay tax on it. But what does it look like from the Montana adjustments? What does it look like I have to do with my $600 of Nashville wastewater plant interest?
It's taxable.
Yeah, where do you see that?
I was looking last night.
Okay.
That's under the additions.
Additions! Right, so we're looking right here, just so you see this. Oh, you got it. Okay, non-Montana munis. So what do I have to do here? in, don't I? Because it's not in my federal AGI. But it's got to be in my Montana AGI, so I've got to add it in. These guys are taxed nowhere. Montana muni bond interest, you don't pay income tax anywhere on it.
What do you mean anywhere?
To the feds or to the Montana.
Oh, but if you're in another state.
Yes.
Okay. When you said anywhere.
Yeah, okay, fair enough. You should really just memorize this matrix.
It's 11 o'clock.
Thank you. I want to go through one more. No, I don't. That's a complex topic. Okay, what I'd like you to do for Thursday then is read chapter 2. I'll finish lecturing on it on chapter 2. Okay? All right, I am going to turn off my recording here.